Hey, it's Alex Martinez with RealEstateSkills.com, and today we're going to talk about real estate investing for beginners. Whether you're brand new or just curious about how people use real estate to build wealth, this video is for you. And if you're serious about creating long-term financial security, I'm here to help you figure out if real estate is the right move for you. In this video, I'll be covering everything beginners need to know about investing into real estate, so the basics, the advantages, the risks, and how real estate stacks up against other investments like stocks. Then I'll show you the exact steps to buy your first investment property. And be sure to stay to the end because I'm sharing 10 tips I wish someone would have told me when I got started. And they're going to save you a lot of time, a lot of money, and a lot of frustration. Here's a warning though, real estate investing isn't for everyone. It's not a get rich quick scheme and it takes a lot of effort. But done right, you will get rich for sure. And if you like what you see in this video, be sure to check out the live webinar I'll be hosting every single week on how to create wealth through real estate investing. You can sign up in the description down below or visit realestateskills.com/webinar. Now let's grab a notebook and let's dive in. First, let's start with the basics. How does real estate investing work? Now here's the simplest way to think about real estate investing. Number one, you buy a property and rent it out. Number two, you collect rent from tenants. Number three, the rent you collect covers the property's expenses like the mortgage, insurance, and taxes. And four, over time, the property gains value. You're earning money from the monthly cash flow and the property's long-term appreciation. And real estate is one of the only investments where you can earn monthly income and grow your net worth at the same time. This is how people use real estate to grow their wealth. It's not rocket science, but it does take a plan. Let me walk you through an example to show you how real estate helps you to build long-term wealth with some real numbers. Let's say you have $30,000 saved and you use it as a down payment on a $150,000 rental property. With a mortgage, property taxes, insurance, and property management, your total monthly expenses might be around $934. Now, if you rent the property for $1,300 a month, that's $366 in cash flow. It's not a huge amount, but it's positive, and your tenant is also helping you pay off your mortgage. The real magic happens with appreciation. On average, property values increase by about 3 to 4% a year. So this means in 30 years, that $150,000 property could be worth $486,000. All this while someone else is covering most or all of your costs. And this is leverage, using a small amount of your money to control a large asset. Over time, this approach builds wealth steadily, and it's not a quick win, but it works. Here's an adjusted example with different, easy to follow numbers. So many students have asked me, Alex, why real estate? Why can't I build wealth in the stock market or crypto? Well, let's compare the two. Say you invest $25,000 in the stock market at a 10% annual return. In 30 years, that grows to $436,000, which isn't bad. But with real estate, you're leveraging $25,000 to control a $250,000 asset. If that property appreciates by just 4% annually, it's worth $811,000 in 30 years. Plus, you've earned rental income along the way. Stocks can be volatile, market crashes or panic selling can wipe out gains overnight, and real estate offers more stability and dual income, that monthly cash flow and long-term appreciation. That's why so many millionaires invest into real estate to build long-term wealth. Let's talk about the risks of real estate. After 12 years of investing in the industry and owning 200 plus stores, I can tell you that's not always smooth sailing, and there are certain things you need to be prepared for. For example, sometimes you'll deal with tenants who don't pay rent or damage your property. Evictions can take months and cost money, which is why tenant screening is so important. And vacancies are another challenge. If your property sits empty, you're still paying the mortgage, taxes, and insurance out of pocket. Then there are unexpected repairs. A broken water heater or roof issue can add up quickly if you're not ready for it. And of course, markets can shift. A downturn could lower your property value, which can hurt if you need to sell or refinance. But the good news, most of these risks are manageable. Screening tenants, keeping a reserve fund, and understanding the market go a long way in protecting your investment. Real estate isn't risk-free, but it's one of the most stable ways to grow your wealth when done right. Now that you know how real estate investing works, the advantages it has to build wealth, and a few of the risks involved, let's get into how you can buy your first rental property. Buying your first rental property can feel overwhelming, but it's completely manageable if you break it down into clear, simple steps. Before you invest in your first rental property, ask yourself if you're financially ready. Buying rentals requires a steady income to cover things like down payments, repairs, and unexpected expenses. And if you're not there yet, that's okay. Start by building active income through strategies like wholesaling or house flipping. These strategies can generate cash quickly and build the capital that you need to invest in rental properties. And for more on how beginners can get started wholesaling and flipping, I'll put some videos up on the screen. And these are in-depth guides where I go through every step of the process so you can get started today. Now, once you have the capital and established a foundation, you'll be in a better position to buy properties that generate passive income and long-term wealth. When you're ready, here are the steps to follow for buying your first rental property. First, get pre-approved for a mortgage. This tells you exactly how much you can afford and makes you a serious buyer when it's time to make an offer. Without pre-approval, you're just guessing. Next, set your criteria. What kind of property do you want? A single-family home? A duplex? Decide what fits your budget and investment goals. Also think about the location, the condition, and size of the property that you want to buy. Then, choose your market. Focus on areas with growth potential, places where job markets are strong and rental demand is high. And always do your research. Check local rent prices, average home values, and neighborhood trends. After that, find a buyer's agent. A good agent will help you locate properties, negotiate deals, and avoid common mistakes. And take time to build a relationship with someone who understands investment properties, not just residential homes. If you don't plan to manage the property yourself, now's the time to start interviewing property management companies. A great property manager can handle tenant screening, maintenance, and rent collection, which will free up your time a ton. Once your team is in place, start searching for properties. Use tools like the MLS, Zillow, or Redfin to find listings that fit your criteria. And don't limit yourself to just online searches. Your agent can provide access to off-market deals as well. Now, when you find a property that looks promising, run the numbers. Look at the rent potential, your expected expenses, and whether the cash flow will work. This step is critical. If the math doesn't make sense, don't move forward. Next, visit the properties in person. Walk through with your agent and pay attention to red flags, like structural issues, bad layouts, or signs of neglect. If the property checks out, it's time to submit an offer. At this time, negotiation is part of the process. Don't be afraid to ask for repairs, closing cost assistance, or a lower price based on your research. Now, once the offer is accepted, you'll move into the due diligence phase. This includes inspections, an appraisal, and working with the title company. If any issues come up, you can renegotiate or just walk away. Finally, it's time to close the deal. You'll wire the funds, sign the paperwork, and officially become a rental property owner. From here, it's about finding tenants and starting to generate cash flow. Now, this timeline might seem like a lot, but it's really about taking it one step at a time. The more organized you are, the smoother the process will be. Let's go over 10 tips to help you succeed as a new investor. Building good credit is very important because it gets you better loan terms and lower interest rates, saving you money in the long run. Use an LLC to protect your personal assets because this will keep your real estate business separate and limits your liability. And you've got to run the numbers on every deal. A property might look great at first, but make sure the cash flow works before you actually buy the property. Make sure you have landlord insurance. Regular homeowners insurance doesn't cover damages or issues that come up when you're renting out a property. Now, when it comes to tenants, screening is key. Always check credit, income, and background reports to avoid bigger problems later on. And if managing tenants and repairs isn't your thing, consider hiring a property manager. They'll handle the day-to-day for a fee, which can be worth the time it saves you. And act quickly on problems when they come up. Delayed repairs or rent issues usually end up costing more if you wait. So always be prepared and be proactive. Also, know your local security deposit laws. Mishandling a deposit can lead to legal trouble, so follow the rules in your area. And don't forget about the awesome tax benefits you get from rental properties. Expenses like mortgage interest, property management, and even depreciation can lower your taxable income. Finally, plan your exit strategy. Whether you're holding for cash flow or selling for profit, always keep the end in mind. Know your goals from the start. Now, these tips just aren't theory, it's what I've learned after 12 plus years of real estate investing. And it's my goal to help you avoid the common mistakes that I've made and give you the confidence to start building your real estate portfolio. Now I want to congratulate you for making it to the end. Let's wrap up with some advice on how to choose the right investment path for your situation and where you can go from here. Remember, there's no one size fits all when it comes to real estate. Your approach depends on your goals, financial position, and how hands-on you want to be. If you're just starting out and need active income, wholesaling might be the best path for you. This strategy allows you to build cash quickly and with minimal risk. Now you can wholesale deals for a quick income and use those earnings to flip properties for larger profits, then reinvest that capital into rentals for passive income. Now, if you're already financially stable and looking for long-term wealth, you can start investing in rentals right away. These rental properties generate steady cash flow and grow your equity over time. However, I do recommend diversifying between these strategies, which allows you to build long-term wealth through active and passive income at the same time. The key is to know where you're starting and what you want to achieve. If you're unsure, take time to assess your finances, your schedule, and how much risk you're comfortable with. It's better to start with one strategy, master it, and then expand as you gain experience. Real estate gives you options, but it's going to be up to you to choose the right path. And when it comes to success in real estate, it's about taking consistent action, learning from every deal, and staying focused with the end goal in mind. And if you're ready to go all in, apply to join the Real Estate Skills Ultimate Investor Program. It's designed for serious investors who want to scale their real estate business with expert support, hands-on training, and proven systems. You can go ahead and schedule a free call with my team at realestateskills.com/apply, and we'll see if you're the right fit and find the right program for you. The links for all of these are in the description down below. If you found this video helpful, please like and subscribe to the channel and share this with someone that you think would find it useful. Drop a comment with any questions, and I'll see you in the next video. Happy real estate investing.